Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar so far this week has started off to a relatively weak phase after it challenged briefly that 80-cent mark overnight and got to a low of 79.97. In light of the US rebound and sustaining at this point, I do expect to see further weakness for the Australian dollar and eventually take out this level at 80 cents and look down towards 79.5 as a potential target. With the technical implications also coming through, along with the unemployment figure that we've got for Thursday at 11:30, it is viewed that August jobs are expected to have increased, with the forecast coming in at 17.5k, with the unemployment holding steadily at 5.6. As I mentioned, viewing the quality of the technical implications, I do expect to see weakness continue, with a cap coming in now at 80.60. Also overnight, the US dollar index nudges slightly higher towards its 92 handle, currently trading around 91.88, after rebounding from the last week's multi-year lows of 91 to the index. It is viewed that the market bulls will now have to play hard to the next move for any potential recovery to sustain for the US dollar. Now, as I mentioned, it's near the 92 handle. If we get a break above 92.30.40, this in terms will see a rally on towards 93.60.80. Now, for some of us that aren't aware, the US dollar index measures the greenback strength against a trade-weighted basket of 6 major currencies, and with the euro being weighted at 57.6. So you can see if my view is beyond 92.30.40 up towards 93.60.80, this in terms will see this trend line eventually being taken out at 119.10.15 with a low overnight of 26, and look down towards the initial target of 118.40.45, and with the next uptrend coming in at 117.60.80. Any advances on the day should find a cap now around 120.05.15. Surprisingly, the market confidence has increased over the last 48 hours for dollar yen as it finds a firmer US dollar and a weaker yen, and now looks towards a target of 110.50.60. A little bit of caution I would give now for a long trade, purely for the fact is I am not supportive at these current levels because this can easily turn around in a blink of an eye. Reason behind that is that with the recent United Nations sanctions against the North Korea, it is the 9th sanction resolution anonymously adopted by the 15-member council since 2006, and it was noted that before the sanctions that North Korea has warned the United States will pay due price if they do succeed by harsher sanctions. So I do expect to see some negative press coming out soon from North Korea. So be careful you don't get caught in a bull trap. Now, a bull trap is a situation where the market traders enter a long position near the top of the range or near an existing trend, and it all turns around. We could be looking back towards 109.45.60. So do be careful if you are trading from a long side. The stronger than expected UK August inflation figures came in as a great surprise to the market as sterling surges through 132 handle and now looks towards 133. It is viewed that the August CPI release, which came in upbeat at 2.9 from previous 2.6, and also the core inflation coming at 2.7 from 2.4, was the highest point since 2011, and now builds a case whether the Bank of England will be talking about potential rate hikes. But it's likely that Mark Carney will try and dampen down the upbeat numbers in these next talks, so we'll see how the market plays out. As long as we maintain above 131.80, then the British pound, if we look at the weeklies, could actually look towards 134.40.80 or 40.50, sorry. With, as I mentioned, as long as we maintain above 131.80, this view holds to a bull case. The gold outlook did tumble overnight and found the uptrend at 1,320.22 after printing a low of 22 to rebound back towards 1,003 1,030 handle. In light of the technical implications, I expect to see further weakness coming through to the market and then eventually challenge this level, which could go lower towards a target of either 1,314 to 1,308 and reassess from there. If we do start getting some tension rising again between North Korea and the US, then this would see this being, of course, a safe haven market and rebound back towards 36 to 42 to 48. But technically, it's not supportive at this stage. To round up with oil, the market still holds to its recent gains since rebounding of $47.4060. I look towards $50 as a potential target, or even extending towards $52 figure 50 before any turnaround in this market. Still a buy on dips, and I expect to see this target eventually reach maybe by the end of the week. So do keep it a very close watch if you're trading from a bull side. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of you.